everybody. Thanks for joining me. I see a lot of you joining. As I promised, I'm on air. Today we're gonna really get with it. I promise it's gonna be very detailed, and we're going to have specific information like I did mention before in my prior video. I have so much to tell you, but we're just gonna take it as we go, because basically there's so much to learn about financial intelligence. If you remember the last video I made, I was talking about the fact that we do a lot of praying without principles and strategies. So this class, hi everyone, I see you all coming online. So this class is going to be very detailed and hands-on, and I promise it's going to be straightforward and specific so that we can get the best out of it. If you can hear me clearly, let me know. If there's anything I need to adjust before we proceed, also let me know so that I can tweak them before I start talking. I don't have a tech person here to support me, so just in case I start and you can't hear me, then I'll have to tweak it myself. But I promise to be detailed, and I do promise to help all of you one way or the other to understand some of the things that I'm going to be sharing today. We have so many things to talk about, but I'm going to start in detail, and then we're going to go into the specifics of how to acquire $1 million assets over the next 12 months. In developed countries like the West, people plan. And without a plan is a plan to fail. You have to have a plan. What is your plan? What is your strategy? You don't just freestyle a life. Even there's a time in your life when you can freestyle because you don't know where you're going, or you're trying to find your bearing. But the minute you are able to figure things out a little bit, it will be time to start making plans. And usually retirement plans is what people don't plan at all. And this is the root cause. This is number one root cause why parents depend on their children for everything. Especially African parents. You see your children as an asset. Oh, this is the child that will make me rich when this child grows up. So you don't make plans for yourself. And then what is this child supposed to inherit from you? The Bible says that the righteous leaves an inheritance for their own children. So as a component of your righteousness is to be able to leave wealth for your children. The ability to leave something for your children is what makes you a great righteous parent. So don't see your child as your offspring as someone that will bail you out. Also, you can share this video so that your friends can get a copy of it, or you can also have a copy of it to refer to later on when you're done. But make sure that you take notes and you try to understand the concept of what I'm sharing today. So I'm not going to beat around the bush. I'm just going to go straight to the point, because we just have 1 hour to offload everything. Probably I have some of the questions you probably want to ask already here, and I will be answering some of those questions after the training, and then you can actually go back and watch this video, or because I'm going to give you a lot of assignments and also a lot of research. So financial intelligence. Financial intelligence is one thing that Christians do not acquire. We learn CRK, we learn so many things in school, but we don't learn financial intelligence. And I think everybody should learn financial intelligence. Very important. It's a very intricate part of one's life to have financial intelligence, to understand your finances, to have good investment strategy. And all this wisdom and all this knowledge came from God Almighty himself. God didn't say you should shut down your brain and not being able to plan for your future. So you should have a 20-year plan. You should have a 30-year plan. I'm 41 this year. I already know how much I'm going to have in assets in the next 10 years, in the next 20 years. I'm not in doubt as to how I'm going to have it. It's not a wish. I'm not planning to believe God for it. God already gave me the power to do it. And then he already gave me an idea and a strategy to implement the things he wants me to have. So that's why God gave all of us a brain. So financial intelligence is very important. And I recommend that everybody should take a financial class. One of Dr. Sunday Adelaja's books on how to secure your financial future will help you. Another book you want to get for this class is Stop Working for Uncle Sam. You need to read those two books. In some of the subsequent classes, I'm going to be reviewing those books. We're going to be taking nuggets from that, and I'm going to add to some of the things that I know and some of the things that you know, and we're going to be merging it together and helping each and every one of us. But basically, the strategy I'm sharing with you today is real estate. And real estate investing is a very hot commodity. Show me the first 10 billionaires in the world, they all have their hands in real estate one way or the other. So it's very, very critical part of financial wealth. There's this saying that you should have at least 7 streams of income. So that if you have one stream of income and that one income is messing up, you should have other streams of income. So one stream of income is not enough, because what if the industry that you invested your income is not doing very well, or there's a collapse in that industry? That means you're going to collapse financially. So if you have multiple streams of income, then if one stream is not doing well, the other stream can be doing well while the other stream picks up. So having 7 streams of income is very, very key to financial success. So one of the things, the number one point you want to have is to have 7, take note that you want to have 7 ways income stream. I'm not sure if this is inverted on you, but this is income. I wrote here. You should have 7 streams of income. In other words, your money shouldn't come from one source. You should have multiple sources that your money comes from. Very, very important. If you have multiple sources that your money comes from, then it's very difficult to really find yourself in a difficult financial situation. Then you can really have time to do what God wants you to do. You can really have time to help other people. Deuteronomy 8:8 talks about the fact that it is God that gives you power to make wealth so that you can establish His kingdom. You can establish His covenant. You can establish His covenant on the earth. The sole number one reason why you're going to be financially successful on the earth, what God is giving you kingdom money or giving you wealth, is so that you can establish His kingdom. There's a calling of God upon your life, and you have to find ways. Like a wise master builder, you need to come up with strategies to invest. Very, very important. And I think I really love Dr. Sunday Adelaja's training this week, talking about person of tithes and offering. Is a church a cult? All this reckless giving and reckless financial behavior is actually what got Africa the way we are. You know, mostly in Africa, there's a whole lot of poverty. And I believe that we as a nation should rise up to have a global vision and ask ourselves, how can we be relevant to the rest of the world? Otherwise, we'll just be a bystander. Okay, that being said, number one, I think I said you should have is 7 streams of income. Then number 2, ideology I want to pass across you today is passive income. After 7 streams of income, the next thing should be passive income. Make sure you have a passive income so that your 7 streams of income should end up becoming passive income for you. So passive income or passive wealth. Money should come to your hands without doing anything. So mere fact that you slept and you woke up, you should wake up to have money. If 30 days runs out of, if you live on this earth for 30 days, within those 30 days, money should be able to find a way into your bank account without you doing anything or investing your own time. In other words, this one lends credence to one of the Dr. Sunday Adelaja's teaching on systems. You should build a system that brings you money even if you're not physically there. I drew something on the board. If you're looking at it, you're going to see I, you're going to see a B, you're going to see an S, you're going to see an E. So in financial intelligence, we're going to place people where they are based off of what they're currently doing. And I'm going to be able to analyze to you and show you, if you, another book I want to recommend is Robert Kiyosaki's book, The 4 Quadrant. It's a very, very powerful book. You go get that book. It's very, very, very powerful. It'll also, help explain to you where you should find yourself. So a lot of us, unfortunately, we get stuck on the E quadrant. There are 4 quadrants of income or wealth. As income as it is, the E quadrant. Let's call that the number 1 quadrant. The E quadrant is the employee quadrant. This is where so many people are stuck into. In the employee quadrant, people are stuck into exchanging their time for money. So what they do is they cannot earn money without exchanging their time. And if you understand that time is wealth and time is everything you've got on the earth, then you need to ask yourself, are you exchanging your time for the appropriate value for money that you're getting? So in understanding the 7 streams of income, if you're stuck in being an employee, I'm not saying you shouldn't be an employee, but try to stay here as little as possible. Find your way out of this quadrant, because if you group 4 people on the earth in terms of what they invest into or how their money comes, they are in one of these 4 categories. One is the employee. The S you see here is the self-employed. So there's a reason why I put the both of them at the bottom of the quadrant. The self-employed people, they have a business, but their business cannot run without their physical presence. In other words, they are still exchanging their time for money. So remember, the key is to find a way not to exchange your time for money. So let me take it again. Employees are people who find themselves exchanging their time for money. They are the people who work 9 to 5. They wake up in the morning. If you have to work 9 to 5, that means you probably get up at 7. Take a shower, iron your shirts, eat, drop your kids to school or whatever, and start driving for about an hour or whatever to work and get in traffic. You get to work at 9, then you work, and by 5 o'clock, you clock out, then you get into traffic. It takes you some time. Some of us spend 2 hours coming out of work. It's so sad that you will sit in traffic for 2 hours and then you drive and get home. Some people 2.5 hours just to get from where they work to where they live. And by the time you get home, you're useless for the day, you're finished. So basically, find yourself out of this E quadrant. This is a key for believers. If you're going to be useful and relevant to God, time is of the essence for you, because how much of your time you're converting into resources and good is very important. So the number 1 thing you want to do is get yourself out of the E quadrant. The E quadrant is people who are employees. Somebody's employing you, even if you're paid so much money, you're still stuck in the E quadrant. You have to find your way out of the E quadrant. So give yourself a target and ask yourself, how long am I going to stay in the E quadrant? And while you're in the E quadrant, set up a strategy to get out of the E quadrant and find yourself to the other quadrants. The next quadrant is the self-employed. The self-employed people own their own business, but they physically have to be there for their business to run or make money. So the same thing, they're not working for anybody, but they can't take a vacation because, once again, they need to exchange their time for money. Then there is a B quadrant. The B quadrant is where you want to be, or the I quadrant. The B quadrant is the business owner quadrant. So a business owner who owns the business, but he doesn't have to be physically there in order for his business to generate income. So you want to get into the B quadrant. When you get into the B quadrant is where you hire a CEO, you hire a business manager or whatever, and you set up a system of accountability that keeps them in check. So they're working for you, but you're not exchanging your time for money. So you can take a vacation, you can take your children to another country and go on vacation, and when you come back, you actually have money in the bank or you have profit. You can travel for 6 months and come back after 6 months or 3 months, and you've actually grown richer than you were. This is where you want to be. Remember, I want to talk about passive income, passive wealth. Money should be coming to you without you physically being there. So move from the self-employed and move to the business owner. By moving from the self-employed to the business owner, you're setting up a system that gets other people to come and work for you. Just imagine the fact that maybe some of you have been an employee for the past 10 years, 20 years, 30 years, even 40 years. And if you work for 40 years, you discover that for 40 years, you wake up every morning, 8 in the morning, and drive to work. And you have to work from 8 to 4, 8 to 5, or 9 to 5. And then when you get to the office, what is happening to you? At the place where you're working, you're actually working for somebody else. Just imagine if somebody else is working for you. These are the business owners who are playing golf in the morning. Sometimes you're driving to work and you drive past a golf course and you see some old men, even young people playing golf, and you're asking yourself, why are these guys playing golf on a Monday morning? The guy is a business owner. He doesn't physically have to be there. Let me tell you one story. One time, was when I was working as a network engineer. We had a big issue, and we couldn't resolve the network for days, and it was affecting the corporation, and we had to reach out to the owner of the company. And when we called the guy said, "Don't even call this line again." I was shocked when I heard the news. I mean, I didn't call him, the other guys called him, but they relayed it to us that the CEO says nobody should call him. I was like, wow, that's where I want to be, because he's at the golf course playing golf while we're slaving around for the past 3 days trying to resolve this network problem. So he's because he's hired us. So somebody is going to lose their job if that issue continues. So while we were scrambling, he was away with his family playing golf somewhere. So that's where you want to be. You need to put your mindset in that framework and tell yourself, this is where I need to be, and come up with a specific strategy. You can't just pray yourself to strategy. You have to sit down and physically work out your strategy. This is where conversion comes in. Convert your time into coming up with a system that gets you into a business owner. The next and the best quadrant where you need to be is an investor. An investor finds a business and invests his money and walks away, and then his money. So instead of you working for your money, get your money to be working for you. So that being said, investors make more money because they charge you interest for giving out their money. So if they have $50,000 and they say, well, you give me 15% of that in 30 days. Imagine how much he's just made, and then multiply by how much he's going to make from other people he's loaned his money or other projects he's invested his money. He has a different mindset. So the key to moving out of all these quadrants is the mindset. Having a mindset to move. A lot of people will have this slave mentality, and Pastor Sunday was talking about slave mentality. There's a mentality of the slave. You have to work for somebody. You just have to work for somebody. You have to work on that mentality. When you work on your mentality and understand what does it take, what is the mindset of a self-employed, what is the mindset of a business owner, and adopt that mindset. What is the mindset of an investor? An investor thinks long-term. What is your long-term strategy? What is your long-term goal? A lot of us don't have a long-term goal. We don't have a 6-term goal. We're talking about countries like Malaysia that have 10-year goal, 15-year, 20-year goals. What is your own personal 10-year goal? What is your personal 15, 20-year goals? Is it clear? Do you have information to move you from being an employee? A lot of us will never get out of that. That is why, there's a message Dr. Sunday Adelaja taught about why losing your job is a blessing. This is what he was trying to tell you. If you lost your job, it's a blessing because it helps you to get out of this, the employee quadrant. The employee quadrant, another human being is telling you this is what you are fixed to get for the year. So if you're going to make $30,000 for this whole year as your annual income, what that means, that person told you, for this year, I bought this year for $30,000. That's how much you're worth. You cannot make up more than $30,000. And a lot of us get stuck in that $30,000 that we'll make for the whole year because we think this is all in all. But it's a mentality. You need to get out of that mentality of employee. You can be here for a while, but while you are here, begin to move yourself out of the employee quadrant to the employed and to the business owner. But the business owner basically is where you want to be, where you have a business. You understand what I'm saying? So when you lose your job, it helps you, get out of that employee quadrant into the other quadrants where you need to be. So understand that when money comes to you, money is a tool for you to invest into something so that it can yield for you. So money, like I tell you, is a tool. Learn how to invest your money so that you can get returns for your investments. That is a mindset of all the wealthy people you see. Even Warren Buffett, all he does, let me tell you, Warren Buffett's number one goal is to buy businesses. That's his number one goal. And he's the richest person so far. And guess what? He doesn't think about going to work for somebody. He looks for businesses that are collapsing, and he buys those businesses, and he refurbishes those businesses, and then he owns the company, and the company starts doing well. Let me tell you, you might not have the kind of money he has to buy a big corporation, but walk down the street of your house, you will see a restaurant that is not doing well. The owner is frustrated. The owner wants out. The owner is self-employed. And you discover that you don't have the money to invest in that restaurant business and earn the proceeds. So what do? Go, because you have a fresh idea, you need to go and figure out some knowledge about restaurant business so that you're not just investing in a business that you don't know about. Buy businesses. You don't have to buy Verizon or buy big corporations, but you can buy a restaurant down the street. You can buy a beauty salon down the street. You can buy a barber shop. Let me tell you something that happened to me 2 years ago. That guy that cuts my hair told me, he said, I have a business idea I want you to invest in, because he sees me, I come cut my hair, I'm always traveling, I'm always flying. I'm like, okay, because usually I'm on my way to the airport. I'm like, okay, can you give me a cut real quick? He said, I need to take my time to cut your hair. I said, no, just give me a straight cut. I can't miss my flight. So he just figured out, okay, maybe he's doing well. So he started pitching this idea to me, but I didn't take it serious. Let me tell you how much he needed from me. He needed $12,000 from me. I had the money. He said, I need you to give me $12,000. But he didn't tell me the amount because I didn't pay him attention. I said, okay, I will look into it. But let me tell you, a couple months down the line, he opened a new store and somebody else listened to him and gave him that money to go and start that business. That is an investor. He only invested $12,000. Maybe my next edition or maybe within the week, I'll go to that shop, take a picture or do a live broadcast from that shop so you can understand what I'm talking about. This is real. Guess how much the guy makes every month from that investment of $12,000? Guess. He makes $12,000 every month. Yes, and I'm serious. Tom, you're asking me how does he make it? So the $12,000 was just used to hire a place and furnish it. Then he has 12 stands, 12 barber stands. So each barber gives him $1,000 a month. Yes, each barber gives him $1,000 a month for the stand. Of course, they make more than that on that stand, but the place, the ambience, if you see, because when you buy a lease, maybe he paid $4,000 for the lease, and the rest of the $8,000 was used in furnishing that place and making it look glorious. That's all. So he's the owner of the lease. So he probably bought like a 4 or 5 year lease. But the barbers in there pay him $1,000. So they don't need to come up with so much money. They only pay for their spots. So the guy, because he's a barber, he knows other barbers who are really good, and they came together and they got a place. So he walks away with $12,000. Maybe after paying, the place was like $2,500 a month or $3,000 a month. And like utilities, he's responsible for that. But after everything, this guy walks away with $8,000 every month for the next 5 years because of a $12,000 investment. Tell me, he wasn't afraid, because all he had to do is get his lawyer to draft a document and say, well, if you're going to come in as a barber, you need to give us 3 months in advance before you leave, so that your spot is not empty. And if you leave, you owe us $3,000. So either you give us $3,000 in advance for your spot, which is your terminal agreement, or you stay 3 months and give us 3 months. So that way he's guaranteed. It gives him time to go find another barber and pitch that spot to him. So all he says is space. So he makes $12,000 every month from a $12,000 investment, and he's going to make $12,000 every month for the next 12 months, for the next 5 years. Can you beat that? Now that is a business. Now that is an investor mentality. So do you understand what I'm talking about? So you don't need to go and buy a big company, a big corporation to become a business owner. But already once you start having the mindset of an investor, then you can move from that quadrant of an employee. Maybe where you find that $12,000 to invest could be in your retirement account. So usually here in the United States, there's something called 401k. 401k is retirement accounts. The last company I worked for, what they do is they tell you, okay, if you're earning $100,000 a year, they tell you, okay, out of your $100,000, we'll give you 5%. So every paycheck, they will give you a 100% matching bonus of what a matching contribution to your retirement account. So what they do is that money is tax-free. So the government looks at your gross income, and then they take out a portion of that, maybe because you cannot contribute more than 5% of your income. Okay, so from that 5% of your total income, they break it into 26 installments, because if you're paid bi-weekly, then that is a bi-weekly investment. So they make those deductions from your checking account before they even start taxing you, and then they send that investment. Then your company will now match it as a bonus. So if the investment is $200 every paycheck, or $150 every paycheck, your company will give you an extra $150, making $300 goes into your retirement account. Now this is where I'm taking you to. You can borrow from that account. So if you have a 401k, you can borrow from that account and do this kind of investment. Walk on the street, look for a business, look for a restaurant that is collapsing, look for a business. And there's so many kinds of business on your street. Just take a stroll. Get out of your car and just take a stroll. You don't need to buy big businesses, okay? Thank you, Anastasia, for the points. I really do appreciate it. So now that is how to move from one quadrant to the other. And look, if I had taken advantage of that opportunity that guy gave me, just imagine how much I've been making every month. You see, now my money is working for me. I'm no longer working for money. I don't need to trade my time. What I need to do is set up structures. So you become a transaction engineer. You can actually engineer other people, engineer a transaction that will favor you. So you use that for your own benefit and for your own good. So at the end of the day, it becomes a profit for you. So you're actually making more money from people who are actually renting space for you, or businesses that other people are running that you're investing into and you own a share. So look for a collapsing business to buy. So in that aspect, I talked about the fact that today we're going to be looking at how you can make $1 million over the next 12 months. And my strategy, number one, is real estate. This year alone, I've acquired 3 properties with this strategy. So I'm not just bluffing you. So I'm going to share this property with you. And also, let me tell you one thing. You can do this thing. You don't have to be in the US to do this thing I'm sharing with you. This is something you can do from any part of the world. Some of you are asking, someone asked me a question the other day, how much does it cost to register a business in the US? And I said $500. Even in some states, it's as cheap as $150. Some states $300. My state's $500. So and you don't have to be any state in particular. So you can actually register a business in the US. And yes, you can have a bank account in the US. You don't have to be an American citizen. You don't have to be based in the US to have a bank account. So number one, you can have a business in the US. Number two, you can have a bank account in the US without being a US citizen or US green card holder or resident holder or anything. So that being said, now you understand that the opportunity is open for all. So now the next thing is to understand what is a retirement account, because the strategy I use 2 of it. One of them I use a retirement account. One of it I invest it separately. I'm going to tell you how this is done. Real estate is very, very, very key and golden. There is a study that shows that every house you see in the United States doubles in value every 12 years. You can do the research yourself, but at least every 12 years, if your house is worth $100,000, in 12 years time, that same house will be worth $200,000. So if you get a $500,000 property this year, guaranteed in the next 12 years, that property is going to double in value. Guaranteed, if the area is good, not like a war zone. So if you acquire a property this year that's worth $500,000, and you hold on to that property for another 12 years, it will be worth $1 million. So now the tax bracket for gains. Okay, when the government of the United States taxes you on, if you make profits within 12 months, the tax bracket is maybe 35% for corporations. But if you hold on to that investment for more than 12 months, maybe you bought a house and you hold on to it for 12 months or for 2 years. If you sell that house after 12 months, go into the second year, then it is taxed as capital gain. The tax rate is like 15%. See? So holding on to a property longer actually has more value, because the tax rate is seen as capital gain. You get the gains. Just imagine you bought a house for $100 million. You kept that house for 12 years. The house became $1 million. The tax on that house is no longer 35%, is now 15%. So you take advantage of the capital gains, whatever, of the IRS code, and then your taxes are low. That's if you don't go through the route I'm telling you, the retirement route. So in the United States, there's something called an individual retirement account. And I was telling you about this, that if you have an individual retirement account, an individual retirement account helps you to save for the future. So remember when I talked about the 401k, the 401k, which is, I told you, is a retirement account. That account, the 401k account, actually is traded by what you call custodians. So those custodians are companies that are particularly set up to hold your money, and they can trade for you. So while you are investing that money that comes out of your paycheck pre-tax into that account, that company can trade that money for you. So if you have $5,000 in that account, after a certain amount of time, that account, they will grow it for you. So usually there are some agreements you sign and all that stuff that allows them to be able to invest that account for you. So they can invest that money on your behalf. So your money is not just $5,000 at the end of the year. Your money can be $7,000 because they've been trading with it. So what they do is they invest in stocks, they invest in bonds, they invest in all kinds of businesses. And sometimes they will even give you the opportunity to choose what they should be investing in. There are the volatile markets and then the less volatile markets. You will decide how they will trade that. So that creates another industry, another job for another set of people. That's a whole another world of job employment and job creation. Having that custodian companies and how much people they employ and all that stuff. So that's very, very key and very, very important when you have that kind of account, 401k account. Now, that being said, a lot of people don't know that 401k and an individual retirement account can be self-traded. Now, this is where I'm taking you to. So a self-traded account is an account that is, so instead of the custodian company trading for you, you can actually move that account into a self-traded account, what you call the self-directed IRA. IRA means individual retirement account. So it's self-directed. So if you move your account into a self-directed IRA, you discover that that money will stop growing because nobody's investing it for you. Now they're not expecting you to go and make those investments for yourself in that account. Now there are laws and rules governing what you invest in and how you invest in and things like that, and what you cannot invest in and how to invest. Basically, let me give you a summary. And usually the government keeps a cap on that money. Say they say in a year you can't contribute more than $8,000 into an IRA account. There's a traditional IRA account. There's also a Roth IRA. The traditional IRA account is the accounts that you can normally all your individual retirement accounts you can only withdraw when you're 59 and a half years old. If you withdraw earlier than that, they would tax you. You pay 10% penalty. That 10% penalty is 10% of whatever is in that account. So on top of all the taxes and levies that are normally would normally hit you. So if the government is going to take a total of 35% from you for withdrawing $10,000, they'll take another 10% from you. So you end up paying 45%. Now watch this. There's also one thing called a Roth IRA. A Roth IRA account is an IRA account that is already taxed. So the money you put in that Roth IRA account is not a gross pre-tax money. It's actually after-tax money. So your net income, and there's a limit to that. So what I promised you today, I'm going to give you names and I'm going to give you addresses and websites. So that it doesn't become just a summary or another teaching. I'm going to give you specific company names that you can go and research, and I'm going to tell you where to find those information. As I promised, I'm going to deliver. Okay? Now, I need you, the number one assignment I'm going to give you guys is to go home this week. There's a company called Quest IRA. Look for it on Facebook, Quest IRA, Quest IRA. They have so many videos on self-directed investments. Sit down and get all that information, because that's not my job to be teaching you the intricacies. They are experts on that, and I'm not going to try to reinvent the wheel, but I will show you where to find the resources. So number one resource I'm giving you today is Quest IRA. So Quest IRA, is one company that I really recommend. They're really good. They know what they're talking about. And not only that, their support is excellent. They have videos on Facebook. So some of us will go to Facebook just to go and watch other people's picture. I go to Facebook to go and watch investment videos. So if you go to Quest IRA's homepage, like them, and check all their video logs, they have so many videos on self-directed IRA, how to open an IRA account, you know, how to manage it. And so this is where the strategy comes into play now. So when you open remember I told you about the traditional individual investment, individual retirement account, and the Roth individual retirement account, Roth IRA and traditional IRA. The Roth IRA, what you start the Roth IRA with is after-tax money. So you open that account with $100 and you do your yearly contribution of maybe $8,500 or whatever limit the government puts every year. So the money that will go in there is money that's already been taxed. So when that money has already been taxed, just like your own net income or your own personal savings, you move it into a Roth IRA. Now this is where the magic begins. Every investment you make from your Roth IRA is tax-free. It's tax-free now, it's tax-free in the future. The only time you pay tax on that money is if you withdraw from that money before you turn 59 and a half. Remember, our strategy is a retirement account. And I told you, I'm going to show you how to put at least $1 million in your account over the next 12 months so that you can retire comfortably. And like I told you, every 12 years, value on properties doubles. So if the assets you put in there is $1 million, in the next 12 months is going to be worth $2 million. So it's even more than I promised. So go to Quest IRA and study about Roth IRA, study about traditional IRAs and how to invest. So that's number one info I've given you. Now you see, I'm giving you details. I'm not just blowing breeze. I'm telling you specific information. Okay, that's one. Then the next thing is how to buy real estate with no money down so that you can tie it to your Roth IRA. Okay, so your Roth IRA can continue to grow at your own investment pace. So let me tell you how it works. You open a bank account with them, $5,000. You find an investment in a restaurant, maybe a dine business, right? So what do? You go to the business, you say, okay, let me lend you $4,000 and I'll own 60% of your company, or I'll own 80% of your company. So that all the proceeds that comes from that company, it will go directly to your retirement account. So you are now trading that account for yourself. The profits and the proceeds that comes out of that business goes back to your Roth IRA. When it goes back to your Roth IRA, it's tax-free. So just imagine if you invested $4,000. Just imagine if I had taken that guy up on his offer and opened a Roth IRA. I opened a Roth IRA and I funded it with $8,000. Just imagine. And then I used the $8,000 to start that business, okay? Every month, I'll be netting $8,000 in my Roth IRA tax-free. That $8,000 that I get after all expenses from this business idea I told you about goes back to my Roth IRA, but the government will not tax that money. You know why they're not taxing the money? Because what generated that money in the first place was money that's already been taxed. So because that money is already been taxed, the money that goes back in there, the profits, will no longer be taxed. The only time you pay tax is if you go and withdraw money from that account before you turn 59 and a half. Okay? So that is the only time they're gonna tax you. But just imagine you're getting $8,000 every month for the next 5 years from a business that you started with your Roth IRA, and that money goes back into your Roth IRA. How much would be in that account in 5 years? And all that money is tax-free. You don't pay a dime of tax. Now, that's self-directed IRA. Now, how do you acquire real estate with this kind of a transaction? So in real estate, there's something called subject to. So subject to, how does subject to function? In subject to in real estate is when you see a property that's in distress. Maybe the homeowner is in distress, or the homeowner can't pay their mortgage and they just want to leave. You know, because the financial burden is so much, they just want out. So what do? You negotiate with the homeowner. Some states like Maryland, if you cannot negotiate with a homeowner whose home is in distress, but in other states you sure can. Find the applicable laws in your state, but in Maryland you can't. The only time you can negotiate with this homeowner in Maryland is if they are no longer living there. They must have vacated from that house before you can negotiate with them on that property. Because imagine recently there was a homeowner on my street, just off my street. He bought a house for his daughter and his daughter's husband, but the daughter was just acting crazy and funny. They couldn't pay the bills and they were ruining the man's credit. Before I got to the owner, he had gone back to the bank and said, we can no longer manage this home. And that home is what? $450,000. That's how much loan is on that property. But the house itself is worth about $550,000, $600,000. So there's a lot of equity on the house they didn't even know they can convert. So what I would have done is to walk up the street. I'm telling you, just on my street. Because when I knew about it, it was already too late. But I'm telling you a typical example. You can watch out for properties in distress. So you talk to the homeowner and negotiate with them and say, you know what, I know you're having problems, you want to walk away, the mortgage is too much for you, or your financial situations have changed, let me take over this property subject to the existing loan. So when you take up a property subject to the existing mortgage, what you're doing is there's already a loan in place, from the bank when the home was purchased. What you're doing is taking over that property and saying, I'm going to pay the property. Sometimes, let me tell you, some of these homes, the homeowners haven't paid their mortgage in 3 months, 6 months, So sometimes there are some situations where you have to come bring money out of your pockets to catch up with the mortgage so that you bring the loan current. If you find such a situation and you have some money to invest, maybe they're owing like $20,000 or $15,000 in back mortgages, you have to bring those mortgages current with your own money. But you have to draft an agreement, get your lawyer and sign an agreement and say, okay, I'm going to walk away, but I'm going to be paying the mortgage for you. But then a lot of objections will come. Some homeowners will say, well, what happens? What if you're not able to pay it? Well, if I'm not able to pay it, I'll deed the mortgage back to you. I'll deed the title back to you. So I'm telling you, casual conversations that you can have with homeowners, and there are thousands and thousands and thousands of homeowners in this situation. I'll also tell you where to find lists of properties. So I promised I'm going to give you specific details. We're going to find purchase lists of all these people in this situation. People with high equity properties worth $500,000 in your area, certain zip codes. There are places they sell all this list. You just buy this list and you market it to them. You just send them postcards or something. A lot of them will respond, some respond. But just imagine if one of them responds to you. And there's no way, because it's a numbers game. So usually for every 1,000 post marketing that you send out, the success rate is 2.5. The average of 2.5 deals will close out of 1,000 marketing. So if you purchase a list of 1,000 properties and you send them a postcards, you at least close 2 deals. That's what they were trying to tell you. You have to market to them. Just send them postcards maybe once every 2 weeks or once every month. For the next 6 months, you at least closed 2 deals. That's guaranteed. So that's the first principle. Once you're able to do that, you now talk to the homeowner and say, look, let's do a deal. Let me take over your mortgage, take over your responsibility. There's already a loan on it from the bank. Now the bank could care less. The bank is not interested in the property. Remember, the bank is an investor. They are here. They loan money. Their own money is what gets them their own interest and their own profits. So the bank doesn't care who's paying the mortgage, because even if when you call the banks, and the voice prompt will tell you if you're the homeowner, press 1. If you're a third-party purchaser or third-party inquiry, press 3. So there's already a provision for third-party people. So you fall into the category of the third party. Now, another document you need is the document called the power of attorney. So some of the documents and other deeper information I'll give only to those in the mastermind group that I'm going to hold by hand and show them how to do this. But with all the information I'm giving you, you can already go do it yourself. Call an attorney, call a real estate attorney, asking for power of attorney, or even go to Google and type in power of attorney templates PDF. It'll pull up something for you, and then take it to your attorney to look over it for you so that everything is okay. Take that document, get a power of attorney on the house so he relinquishes his right and authority, and then there's another document you get from the bank that authorizes you to look into their loans and this, their health of it or whatever. So usually the homeowners will give you the information, but if they don't, you call the bank directly. That power of attorney gives you the right to call the bank and make inquiries and get all the information you need. So 1 second. I want to get you some data. So basically what you do in that case is, now you get all these homeowners, you negotiate with them, you take over their mortgage, and they just walk away. Let me tell you, there's so many people, you'll be shocked that people are going to walk away from the mortgage. You'll be shocked. There are some people, let me tell you situations that make people want to walk away from the mortgage. Sometimes people buy homes, maybe a married couple, and then they go into a nasty divorce. And the wife doesn't want to have anything to do with the property. The husband doesn't want anything to do with the property. I'm telling you, if you want to see this kind of property, just go to the courts. Go to the courts in your own jurisdiction and just stand there at the divorce courts. You will see people who are just fighting, like they don't want to see each other again, like the devil just came into their home and the home is on its way to bunkers. And most of these homes don't have any equity. They just have the value on it and they already have a loan in place. So some of you who don't have good credits, who can get a loan, this is an easy way to acquire property that you can live in on your own without even having to go get the bank. And the responsibility will be on those who already got it. Now, one thing I always tell people is don't promise the homeowners you're going to refinance, because if you never do, then you've broken your promise. If you do refinance, that's better. But what you want to do is, as quickly as possible, get the deed in your name. Once you get the deed in your name or in the business name, that's a better way. I'll show you another way how to. Okay, I'll show you another thing. There's something I want to share with you again, on top of what I'm sharing with you. So there's so many situations. Divorce is one of them. A lot of people don't want to stay in their houses because of divorce. Military couples, a lot of military couples, they move a lot. They're in 2 months, 3 months, they start moving again. Some of them will get to a place, they buy a house. Before long, they're moving again. They're moving them overseas. So they're just in a situation. Some people want to move back. There are all kinds of things going on. Some people can't pay their mortgage. Some people have a debt in the family. Some people had sickness and they can't afford it. They just want to go and rent, and they just don't want to deal with the hassle. And sometimes it takes an average of 12 months for the banks to foreclose on this property. Sometimes even 2 years. The banks haven't come for their property, and the homeowners have defaulted for 2 years. So there are all kinds of situations out there. So what you're looking for is a situation, and there's a place where you can buy this situation, the list of all the situation, and then send them postcards. All you need. Sometimes you send them postcards, they will not respond. Send them another one. Send them another one. Before long, they will start responding to you. Just one deal is what you need. So now, watch this. You find a property worth $350,000 or maybe $500,000. Take that property. Look at the mortgage on the house. Usually, the mortgage is always usually lower than the going rate of rent. That's why usually people are encouraged to get on or to become a homeowner, because you pay less. But if you want to rent, you usually want to rent. The people who are renting want to rent above their mortgage. So when you get it that way, what you can do is now turn around and rent it out. So if the property is worth, for instance, $400,000, and the bank, the homeowner is owing the bank $300,000. There's already $100,000 already on that property. So what do? Your mortgage, if you go into Google and put in amortization schedule or mortgage calculator, it will bring you, just type into Google right now, mortgage calculator. It will bring you a link. You click on one of those links. You can put in the rates, maybe 6% or 5%, and then put in the loan amount, home amount. It will tell you how much you're paying every month. So, and then go to a website called rentometer.com. So you can compare rentometer.com, www.rentometer.com. You go to that website, you put in the value of the property or the street or whatever. It will tell you how much properties in that area are renting for. You compare that to the mortgage that is being paid. Even in some situations where you have to come out of pocket, or you're not even breaking even, I'll tell you to take the deal. Let me tell you why. Just imagine the mortgage is exactly or very close to the rent. So you're not really making anything. Take over the property. The property is now in your name, right? Good. It's your property, but you're not the one paying the rent, the mortgage. The renters are paying the mortgage for you. And usually the amortization schedule is usually like 30 years. So over the next 30 years, the people who you'll be renting the property to will be paying the mortgage for you. So just imagine if you get a good, very good, very, very good tenant who stays there for 5 years and they're paying them, right, their rent on time. At the end of the day, what's happening to you? Somebody else is buying a house for you. You see why you have to get out of this quadrant? Because a lot of those people renting are in this quadrant, the employee. They want to rent, so they're paying other people's mortgage. But you are on this level, You're a business owner, you're an investor. Because of your mindset as a business owner and investor, you are now having a property that is in your name, that those who are renting, remember you acquired this property as a distressed property. So one of the places where you can find distressed property is listsource.com. Listsource.com, listsource.com. Go to listsource.com. You can buy lists from them. I think Realty Track have their own company also that sells lists. Realtytrack.com. They have a list providing company also. There's so many of them out there too you can find, but just two is good enough. Go to them. You can buy a list of all these distressed properties and stuff, on properties in foreclosure or whatever, and approach the homeowners or market to the homeowners. And let me tell you how I got mine. I was, on my way home from work, and I saw a sign outside that says "For sale by owner." For sale by owner is another way to find properties. When you're driving on the road and you see "For sale by the owner," go have a conversation with them. Come up with this strategy I told you about. It's called subject to. It's very, very legal. Even the title companies know about it. There's a column that the federal government provided for somebody else taking over a property subject to the existing mortgage. So usually you find those kind of situations where the marriage is absolutely gone bonkers and the couples no longer want to see each other, but they purchased the house together and the mortgage is on their head. They think it's a trouble, and then you offer them a lifeline and say, look, I'll pay the mortgage, just walk away. Okay? So what do? You turn it into a tenant placement, and most of these properties would give you a break even. Again, now you're talking about passive income. So if you're getting passive income from a property that is generating $400 a month and you have like 5 of it, think about how much you're making. And that is a long-term income. Some properties give you as much as $1,000 a month. Multiply with that by how many of these properties you've been able to acquire over time. So when you get all these properties, you negotiate with the homeowners. Then what do? You take those properties and then you put a tenant in that property. For sale by owner is very, very key. That's how I got mine. I didn't even do marketing. I was just driving home, because what I do is, now this is where opportunity meets preparation. Whenever I'm driving to work or somewhere and I see for sale by owner, I'll go and turn, I'll go and back, and I'll get that number and I'll call the owner. And sometimes, like mine, I was driving home and I saw for sale by owner, and I stopped and I called the owner, and the owner says, I'm down the street, we just left the house. And they weren't even living there anymore. I said, okay, come right back. I'm right here, right now. I'll make you a full offer for your house. Say, you make me a full offer? I'm like, yeah, I'll make you a full offer. So you looked at the house. I said, what is, how much you selling for? There were couples. They said, oh, we're selling for X, Y amount. I said, okay, good. I'm going to take it for that amount. They said, really? I said, yeah, I'm taking it for that amount. But there's a structure to it. I will take over your mortgage. How much is a mortgage a month? They said, this property has been a nightmare for us. We're actually bleeding money. We're renting this property, and we have to add an extra $1,000 a month or $500 a month just to complete, because the property's mortgage was $3,000 a month, and the rent in the area was $2,300. So they had to pay extra $700 every month for as long as they've owned that property. So now that's clearly a disadvantage. They are losing money. They want to protect their credits. They don't want to default. So even though they rent it and they don't need it anymore, and they can't sell it because there are other taxes and fees involved in selling a property. There's agent fees, all kinds of fees. So at the end of the day, they sell, they're going to lose either way they're going to lose big. So they were just stuck in a situation. I said, okay, don't worry, I'll take care of it. Now, I'm not going to tell them my strategy. It's my strategy, what I'm sharing with you. My strategy is this. That same property, I could still make profit from it. They were renting to one family. So one family comes, but I can do a rooming system where I rent it room by room. If I rent it room by room, I'll make profit. I'll make instead of paying $700 every month, I'll make $200 in profits. Just imagine. And the property is in my name. But guess what? I'm only keeping the property in my name and allowing the tenants to pay for it for as long as the property has a mortgage on it. Now, when I acquired this property, I'm actually thinking about retirement. I'm thinking in the next 30 years, I should have stopped working. I shouldn't be as active. Or maybe I should be working by then, but I would have accumulated this kind of wealth that is in my retirement portfolio. So what do I tell myself? Okay, I'm not the one paying for it. I didn't put a loan on it. The property is worth $500,000 today, but in the next 12 months, it's going to be worth $1.2 million or whereabouts. So I am sure in the next 30 years, that property probably worth $3 million. So I'm not even, remember it doubles. So I'm not even going to bother myself. I'll just put tenants in there that generate income. But let me even do you another good. I'm not even going to wait 12 months, 30 years for that property to, for the mortgage on the property to finish. So I have an idea, an excellent idea for the business. So if you're in the US, there's some business, there are all kinds of business that you can go do from the home. There's assisted living, there's group home, there are all kinds of businesses that generates at least, which I want to do with the one I have. That it generates about $30,000 a month, some $15,000. After taxes, you're okay with $15,000, $12,000 every month. And after expenses and all that stuff. So my idea is to use that property, register it, and I didn't even register the property in my name. So if you sue me, I don't own anything. It's the business that owns it. So the business itself, do a group home there. And the business will pay down on the mortgage as a liability. So in the next 24 months, I expect that property to be fully paid. Because now every money the business makes goes into paying down the debts as a liability, which is legal. If a business is owing, it should pay its debt, right? The only time a business pays taxes is when it's made profit. So the business cannot be considered as making profit until it has finished paying all its debt. So if the business already acquired the property worth $300,000 or $400,000 or $300,000 in debt, they want to pay it first. So they have the choice to pay taxes or not. But they can't pay taxes because legally you only pay tax on profits. So I put a business in, that's it. Look, I got a house. Watch what happened. I got a house for free. I transferred the deed into a company I registered. I took $300 and registered the company. Now the company I registered has an asset worth $300,000 in debt. Now, once that company begins to make profits, that company now pays down on the debts on the house. So in another 12 months, another 24 months, that $500,000 home will be fully paid for with tax-free money. You see? So I'm not even paying for it. So I could put a tenant in there and pay gradually for the next 10 years, 20 years, 30 years, whatever. Or I can put a business there. The business can make more money, pay down on the debts. For as long as the business is owing $400,000, it cannot pay tax to the federal government because it has a debt. It's just like you bought a car and you want to pay off on your car. So all your liabilities and expenses, those of you that are accountants, you can be a witness. The only time you make profit is when you've paid all your debts, right? So you can actually throw all your interest, all your profits into it and walk away tax-free. So in the next 24 months or 36 months, I see this house fully paid, $500,000 property in my name, and I'm not owing anybody. That is a tax optimization. Yeah, so it's all about strategy. And God didn't shut down your brain. I could have sat down and praying, oh God, these things are going to be... He didn't shut down my brain. And I'm doing this, I'm not even there. I set up the business, I employ people, I provide employment for those of you who like to be employees. You go in there, you're working, you're making money for my business that is paying off $500,000 property that I'm going to own because I own the company. And I don't have to be there. So when you set that kind of business up, now this is just one deal. I've got 3 properties I got already this year. And I'm going to set the same thing up on all of them. Just imagine if I have 10 of them over the next 24, 36 months. and I set up all these businesses in these properties, and they're paying down all the debts within a short period of time. Just imagine how much in assets you'd have accumulated. Now, I'm talking about how you can have $1 million in assets. So from what I've just shared with you, you understand that it's so easy, so easy, so easy. Some of you, even in other countries where you don't have mortgage system, you have banks that loan people money for houses. Look for those opportunities where those houses are defaulted. Some of these banks, they have debt. People are owing those banks. You can approach some of these marketers and tell them, show me the assets that are distressed assets in this bank, and they'll show you all the distressed assets. Go market to those homeowners. Some of them want out. They don't want to pay anymore. Their situation has changed. Maybe somebody died, or they moved overseas, or something crazy happened, and they want to leave that asset. That asset right there. Some of you, now this is time to pray. Conversion can come into place right now. You look at a situation like that, and then you go and ask God for wisdom. How do I convert these failing assets into a profitable asset? So all of you that knows how to pray in tongues and whatever, this is where your tongue is now needed. You ask God for wisdom. You go into solitude. This is the things you do in solitude. You go into solitude, and then you're listening for the voice. Sometimes it's not even the voice of God, it's the voice of your own idea and your own spirit talking to you, telling you what to do about that distress situation, and flip it around. All you need to do is to see something other people are not seeing and flip that situation around. Convert that situation into a profitable enterprise. I met a situation, the couple didn't know what to do with the property. I took over the property. Now I'm flipping it into something profitable for me. They use their credit. Right now, as I'm speaking to you, the property is still in their own name. If the bank were to look for them now, they will still be looking for them, not me. But the deed is in my name. Because the situation was choking them, so they wanted to do anything. In fact, I've actually helped them. The wife calls me once in a while, and she just thanks me because it was draining them. Every month they had to pay $1,000 or more, sometimes $1,500 just to maintain that property. And they've been doing this for the past 3 years. They were coughing out $1,200 just to maintain it. So some families have properties that is a nightmare to them. And to you, because of the idea I gave you, it's no longer a nightmare. It's now a solution. There's one of Dr. Sunday's book that talked about where there's a problem, there's money. This is a classic example of that book. Where there is a problem, there is money. You know, the only hard part is when your mind tells you can't change it. Yeah, thank you. So basically what you're looking for is a problem, a situation. And how can you profit from this situation? Every problem has a solution. The person who is in that problem don't see it. And they just want to go. Now this is where conversion comes in. If you missed those videos on conversion, now it's time to go back and start learning about conversion. How can I convert this situation? Pray about it. You know, those of you who can pray in tongues, pray in tongues. This is the time to switch and activate those things. All those goosey bumps you get, this is the time to receive revelation on what to do about a situation. You understand what I'm saying? So that transaction is called a subject to transaction. You can Google up closing companies in your area and talk to them about subject to. Some of you that are close to me, I could give you some of the ones in Maryland, but you know, you can only close for the ones in your area. Now, there's something called virtual wholesaling. People actually virtually market to people all over the US and do all the transaction over the phone, find a buyer, and they actually flip a property without having to be there or in that state. So if somebody in the US can do a virtual wholesaling, you can actually be anywhere in the world and actually do the same thing. Virtual wholesaling is another way you make money in dollars without having to be in the US. For some of you that are not in the US and you're in Nigeria watching me or another part of the world, go and find any teaching on virtual wholesaling. There are actually some people on my friends list who are experts in that. So if you approach me personally, I'll give you their names. I'll talk to them so that they can walk you through how you can be a virtual wholesaler. Some of them make $10,000, $20,000, $30,000, $40,000 just because they have a laptop. And it's legitimate money. They flip a house from any part of the world and they sell it. They find the owners, buyers, in somewhere, and then they sell it to those who refurbish the property. So virtual wholesaling is something that you guys want to exploit. So let's go back to subject to transactions. So that subject to is find a situation, go to listsource.com, buy their lists. They will give you a list of names and addresses of homeowners with those kind of issues. Get a postcard. Either you can physically do the postcard or go to a mail merge portal like yellowletters.com. Go to yellowletters.com. If you go there, you can actually merge that list with the system, so the system will mail out the postcard for you, so you're not physically writing the postcards. If you go to yellowletters.com, you can find information on how to merge the list you buy from list source and put it in the same link and send the list, market it to them. Or better still, go to Zillow.com. Zillow.com has a lot of for sale by owners, and they put their numbers there. You don't even need to leave your house. Just go to Zillow.com, look for sale by owners. This is some of you can be doing in your spare time. If you're doing a 9 to 5 and you want to get out of it, when you have a spare time or in the evening at night, go online, go to Zillow.com, www.zillow.com, and you can actually purchase those lists. If you purchase those, you can actually find for sale by owner on Zillow.com. Put in the zip code of the area you want to market. Do your research about zip codes where you live, or zip codes that are profitable zip codes. There's zip codes that really have really nice houses. And there's a whole, in Maryland alone, there was almost 300,000 foreclosures, last month alone. 300,000 houses. What I mean foreclosures is banks, file for foreclosure. They want to repossess their property. So there are at least 300,000 houses in Maryland alone. 300,000. So just use your mind and imagine 300 homes that are in distress in Maryland alone. Now think of other states around the US. So all you need is go to Zillow.com, find for sale by owners, email them, call their numbers, and start conversation. A lot of them they're just tired of it. Some of them are landlords who don't know how to landlord, or don't know how to put a tenant in there. They don't know how to do their due diligence, because what takes away the headache from landlording is knowledge. Some landlords, before they put you in a house, they will do a background check on you. They will run your financial, they will run your credit history, they will run your rent history, they will check everything. And if something doesn't check out, they don't. So you need to market yourself to them. So they're not going to put you in their own houses when they know that you're defaulting in the things that you do. So very, very, very important and very key. Zillow.com, listsource.com, you buy all these lists. But I've told you, even if you don't have any money at all, go to Zillow.com, you find for sale by owner. Even if you don't have any money at all, walk on the road, just drive around, or as you're going, you see a sign for sale by owner. That is your target. The owners, there's a reason why they don't want to use an agent, because selling the house is going to cost them money. Even some of these houses, the owners will even pay you to take over the houses. I have countless testimonies of people who homeowners will give them $26,000 and say, just take over my house. Because maybe selling the house will cost them $40,000 or $30,000, because maybe the house is worth $500,000, and then they owe $500,000, exactly $500,000 on the house, and the house is worth $500,000. So by the time you pay agents and you pay the county, pay all these fees, you're probably paying $40,000. And then you come to me and say, okay, you don't have to pay $40,000. Write me a check for $20,000. I'll take over the house and I pay the mortgage. You just walk away. So many people want to do it. There's one house I was trying to buy at one time. She and her husband were just tired of the house. This house was bought during the recession, so the value was so high, and it doesn't make sense at all. By the time I got to them, the bank has taken over. But those kind of properties, you can go to those homeowners and get them to sell you their houses. And sometimes, even in Maryland, there's a way you can find owners of homes without having to even leave your house. There is a website called tlo.com. If you go there and register, they'll give you all their, how they do it, what their process are to verify and validate you. Once you go through tlo.com and they certify you, they give you access to their system. Pretty much you can pull up anybody's information. So if you find somebody's phone number, or you find an address or whatever, you just put in that information there to pull up every information about that person. This is a very, very serious information I'm giving you today. That's the same system the police use to do background check on you. So if you're doing an investigation on a house and you want to find the owner has vacated, they ran away, this is how to track them down and mail them or call them. Everything is there. So that's another one. Another way is in Maryland, there's something called sdat.com, sdat.com. And sdat.com is any house you see in Maryland, all you have to do is to put in the address of that house into sdat.com. It's Maryland Property Real Estate Portal. It's owned by the state of Maryland. It is public information. It's free. So you go there and register, put in that house number. It will pull up the name of the house, the owner of the house, and where they live. So right there, you see an abandoned vacant building. You don't know who owns it. Go to sdat.com or type in Maryland SDAT, or find the same system in your area and put it in, and you'll be able to pull up the information about that property, and you're able to market to them. So all you have to do is just market to them, call them, reach out to them, and a lot of them want to do business. A lot of them want to talk. A lot of them have issues, and they just don't want to have anything to do with that property. They just want to let go of it. And this is money. This is money just sitting right there, waiting for you to take advantage of it. Only if you have brain, if you have strategy, if you have wisdom, if you have tenacity, if you have, what it takes. The information I'm giving to you is priceless. I learned this thing, I paid $8,000 to learn what I'm sharing for you for free today. So I need you to take this very serious. And I'm not playing. I don't blab. When I said I paid $8,000 to learn this, I did. I have proof to show it. That's what it took me to learn it. And I don't regret that money, because now I'm using it. I'm an investor. I think like this. So I don't hold my money like a goalkeeper, because that money is useless to me. If I put it in the bank, how much interest is the bank going to give me? Nothing. So what do? I go to learn something that's going to change my life. There's one of Dr. Sunday's book about how to improve your net worth. This is one of the things you do to improve yourself because you need to improve your own value here. Change your value. How much are you worth? So this is what you need to do to get yourself here. Go into a training where people are paying money to learn stuff. Pay that money, because you're going to get it back. That's what it means to cast your bread upon many waters, not to give it to your pastor. Cast your bread as in invest it into knowledge, something that you can convert into yourself. Don't cast your bread by giving your money away. That's the money that's crying forever. Cast your bread into trainings, into knowledge. Learn something new. Learn something that will improve your value. And I'm going to finish by telling you a little story of investing. When I first came to the US and how it changed my whole life. Towards the end. I'm almost getting to the end. But on the subject to transactions, now how can we tie this to your retirement account? Remember, I told you that your IRA account, you can actually, you can have an IRA account that is called a Roth IRA. Do your research, go to Google, type in IRA. You see, Google brings you so many questions. What is IRA? How to open an IRA? What is Roth IRA? What is traditional IRA? Go learn all that. I'm not going to tell you all that. I'm not going to reinvent the wheel. Just go online and do your own research. Find out about IRAs, Roth IRAs. Go to Quest IRA on Facebook. Even if I didn't do anything today and I told you about Quest IRA, I've changed your life. The only reason, after learning what I've told you today, that in the next 46 months or 36 months, you're still broke and poor, is you're going to hold yourself responsible. I've given you tools. I've given you information. I've given you address. You don't even need to be in US to do this. I told you, you don't. You don't need to be here to do this. You can be anywhere in the world and you still invest here and make that kind of money. Go to Quest IRA on Facebook. Learn everything about, they have subject to investment there. They have how to invest in IRA. So how do we tie it down back to IRA? For IRAs, remember I told you about the Roth IRA. For the Roth IRA, remember you don't pay tax until you reach the age of 69. I was actually getting a call right now, my third property that I acquired, and I'm closing that deal. I was telling you, I got this property on Saturday, and by now I'm closing the deal. The property is in Baltimore, is worth $200,000. It's worth $220,000. But the landlord was like $200,000 in the house, so like only $20,000 in equity, but he doesn't want to have anything to do with the house. So I'm like, okay, I'll take over it using the same strategy. I just have $200,000 in assets. You see, so there's so many situations, and this one I didn't even do marketing. I just was, a friend of a friend on Facebook who put it up, posted it, and I called him and we spoke, and then he did all the communication. But this one I'm going to put money down. I promised to give him $5,000, and then he's going to walk away. So that's fine. I'll give $5,000, but I know I'm going to make money. The only thing that this property is actually going to cash flow for me. The property is going to bring $1,850 in rent, and the mortgage is $1,400. So I'm actually going to be working with $450 every month in rent from that property. And the property has no work. All I need to do is just to put somebody in there, and I'm making $450 passive income. You understand? Because I invest $5,000, I'm getting, so maybe in another 12 months I get my $5,000 back, but the property is now in my name, and I'm going to put a business in that property that's going to pay down that property. That's another 200K. Ching ching. Now watch this. You need to find, if you're in the US, find REIs in your area. Only $5,000. So there are REIs in your area, real estate investment clubs. Go to meetup.com. You can find them. When you go there, you meet, that's where you network with so many people. You get a lot of information, you get phone numbers, you get cards, you get contacts. You see people making money like crazy. And when you're around such people, it rubs off on you. Naturally, it rubs off on you. It naturally rubs off on you. Yes. So, no money down. You find all these properties. The only reason why I'm paying this guy $5,000 is called, in real estate, is called an assignment fee. Okay, I'll call you back. He left me a voicemail. So I'm going to close that transaction after this broadcast. And I'm sharing with you. It's called subject to transaction. So what you can do is this. You now go to your, for instance, just imagine this deal that I'm telling you that I got on Saturday, I'm closing on today. You go to your Roth IRA. Remember, you have $8,000 limit. So you contributed $8,000. So you go to your Roth IRA, you write a check on behalf of your Roth IRA, and then you mail it to this guy who is the assignment guy. And then he, moves the contract over to you. You take over that property. The property is now yours. You take over the property. Now, the rent that comes out of that property has to go back into your Roth IRA. So your Roth IRA automatically becomes a custodian of half of $200,000 or $220,000 worth of property instantly. It starts making $400 a month. Just assume that money is going into retirement. Just because you were able to think and you set up a transaction, your future is already being set. Remember how you can secure your financial future. So you set this up, you set this investment up, and then investment keeps building itself. You see, and guess what? These houses, I don't put them in the name, I put them in the name of a business. So the business, they become a business themselves. Every money the business makes pays down the mortgage. So I don't wait 30 years to own that property. I get it like in 36 months. My goal is to pay down on all the property. And sometimes, let me even tell you, some of this property, you get them today, you hold them for 4 or 5 years, the value jumps. Maybe a company comes in that area, whatever, and there's a $200,000 extra, or it doubles. Such area like DC does that a lot. The value just jumps. You bought the house for $400,000 and the house is worth $2.5 million. Just like that. It's just crazy over there. Things that are happening over there. So if you're very close to such an area, you hold that property for another 2 years. So the thing is, now when you tie this property to your Roth IRA, the proceeds that come out of this property, the profit that comes out of this property in terms of rent goes back to your Roth IRA for your retirement, tax-free. But let me tell you a secret. Just because it goes into your IRA tax-free and you can only withdraw when you're 59 and a half doesn't mean you cannot withdraw now. The only thing is you pay penalty, right? Okay. So what if I set up a Roth IRA that makes up to $3 million? Now, watch this. If your Roth IRA had made you $500,000 without tax, you've already built equity. You've already built capital. You see? Now, you build capital at a faster rate than somebody paying taxes, because if you pay taxes, your capital now is short. to now start doing business. But if you're not paying tax for the past 5 or 6 years, and you built huge equity or capital into a certain account, now if you now pay the penalty at once, they take the 35%. Remember, your whatever is now taxed at a capital gain, no longer remember my capital gain. Now it comes into play because it's asset acquired over time, plus the 10%. So what? But your percentage you're paying is on a bigger bulk, not on, crippling each and every. Because if you're paying tax per transaction, you won't get to that whatever faster. So if drop dead, you need to do something, really, really fast or really, really quickly. That's account you can go to and withdraw. Nobody said you can't withdraw it. You just have to pay the 10% penalty. That's it, and the money is all yours. The same way you can set up an account, there's an IRA for your children's education. There's another one for children's education. You can set up a transaction like that. Like, I bought a property in Baltimore, and property was what, $80,000, and I got it for like $30,000. So I have $50,000 in equity already in the house. So what did I do? I can put a renter in that house, bring in $2,000 every month, but it goes back to the Roth IRA for, children's accounts, and then I can use it to fund education for my children. But those kind of accounts can only be used for education. So you can set up a transaction like that for your children and use it to pay for their education. They can read whatever they want to read, and you are training your children hands-free. You're not even bringing money out of pocket to send them to school. The investment you set up for them when they were young paid for their medical school when they grow old. So even if anything happens to you, that account is running to take care of them. So if you have 5 kids or 4 kids or 3 kids, you can set up 3 different accounts for them. It's yielding account. So you're training your children hands-free. Anything about education, they are covered for life. Because number one, not only the property will continue to increase in value, but the monthly rent will be taking care of their educational expense and all that stuff. So it's very, very easy to do. So do your due diligence, how you can tie this thing. So I've told you how to find this buyers and sellers. You can find them when you drive on the streets. You can find them online, Zillow.com, for sale by owner. You can find them if you market to them and sell that, send them postcards on listsource.com. So these are 3 ways. So, but I've given you 2 ways that you can even find them without even using money. Some of them live on your streets. Some of you, you walk down your street, you see for sale by owner, you don't know that is $1 million right there, or $2 million, or $500,000 right sitting on your street. But because you don't know what to do with it, you can't interact with them and actually have a conversation with the homeowner who actually wants to walk away from it. Like, a lot of them want to walk away. One of my friends, he got his. The owner was like, I don't want to have anything to do with this property. That's what the man was saying. He said, bye, just take it. I don't want anything. He was like, calm down, calm down. He said, I don't want to have anything to do with this property. Do you want it? It's all yours. Just show me where to sign and I'll sign. Bye. I was like, whoa. I mean, there are situations like that. And that's all you need. You just need one situation. So one of my friends in Texas, she has 10 houses. 10. And she's a grandmom. She used to have a restaurant and all that stuff, Yeah, a non-resident can buy a property in the U.S. Yep, you can. A non-resident can buy a property in the U.S. all day long. You don't need to be a resident in the U.S. As a matter of fact, I'm actually buying a property for a friend of mine right now. He's actually based in Ukraine, but he wants me to buy a property for him. So I got him one of those deals where he'll be netting $2,000 every month, just passive income. And a lot of you want to go to other places, buy a property, and they pay you $1 million for the whole year. That's so dumb. You're not getting a lot out of your money. But real estate is one thing you can do to make so much money in so quick a time. You'd be shocked and amazed. And with this strategy of subject to, and the strategy of putting the business in that house, is another way that you can pay down on that house, on that property, really quickly, pretty quickly. I'm telling you. So there's so many ways you can do this, and Maryland seems to be one of the greatest places where you can invest, especially in the U.S. market. Subject to is a very, very easy way to get into real estate, investing without having your own money. You don't need any money to do this. Actually, the law requires you to have an earnest money when you do the transaction. So your earnest money can be $5. In fact, your earnest money can be $1. In my own case, I gave the couple $10 as earnest money. I gave them $20 and they gave me $10 change. I made sure I got my change back. So the law requires you to have an earnest money when you close the transaction, so that something changed hand, and there's no limit or minimum, whatever. So I could have given them $1, just to be ridiculous, but I'm like, I just gave them $10, and they didn't care. It wasn't they weren't after the earnest money. But sometimes earnest money here, it can be $5,000, $2,000, or whatever. I just give them $10. So I got the house with $10, literally. So, and my strategy is right now on that property, I'm putting a business in that property. I'm setting up as a business. The business itself is going to be bringing me like $25K, $30K every month. I'll probably net $10,000 every month after that. But all that will go back to paying the mortgage if I want, and pay taxes, or not pay taxes at all and pay down all the mortgage, and the house is mine, free and clear. Okay, how much you be paying every month if you buy a home without mortgages? What the mortgage is? If the mortgage on the house is $1,500 or $2,000, you have to pay that mortgage to service it. And what you do is you find a tenant and put in that house. Get an agent. Agents have tenants lined up looking for where to rent. The agents will put people there. Maybe if the mortgage is $1,500 and you're renting it for $1,800 or $2,000, so after every month you make $400 and then you pay the mortgage. So that's how you service it. So you're actually not paying out of pocket. And a lot of these renters, a lot of these renters actually pay you security deposit of 1 month extra, so you can plow that towards the mortgage. So you're like 2 steps ahead of your mortgage. So if you're actually 2 steps ahead of your mortgage, and even if they default or something, these always, but the only caveat emptor is if they default or anything, you have to find a way to come up with out of pocket for that, or hold them liable, or take them to court and then they'll pay. But here in the US, it's pretty easy to get your money out. And you take them to court and you evict them. They don't play. 30 days, you don't pay your rent here, you're out on the streets. You can't drag rent here like in other countries. 30 days, you don't pay, out on the streets. That's why it's a very, very tough thing for people to lose their job. You can be homeless very easily here because so many things are tied to mortgage, and the country knows about that, so they enforce rental laws, as long as you're within the rental guidelines and parameters. So that's how you get that transaction. I told you where to find information about setting up your own IRA accounts, Roth IRA or whatever. There's a lot of videos on how you can do those transactions, and they also teach you a lot of examples of the people who did subject to on their IRAs and made so much money. So I hope I've been able to give you guys the information I promised. Let me see how much time I used. I was talking so fast because okay, so I flipped. I don't know how much time I've used so far. I'm trying to figure out. Okay, 1 hour 27 minutes. Whoa. Woo. Wow. I think I have to go now, so that this video is not so long. 1 hour 30 minutes just flew. All right, I've given you so much. I'm not sure if you guys have any questions that I can take very quickly before I go. Someone says they're in Hungary. Can help in investing in real estate in Hungary. Now, one thing I need to say is this. In this platform, I'm not collecting anybody's money. I don't need your money for anything. So I'm not setting up this platform to collect your money or whatever. Don't give anybody money. Don't invest in anything. This is just for your own education so that you can invest by yourself. Okay? If you want to do business with anybody, it is purely at your own risk so that people don't get exploited or whatever. Here is just purely to help you, set you up for the next 12 months on how you can have $1 million in assets within the next 12 months. This is just one strategy. I have many more strategies to share with you next Sunday, but this is just my #1 strategy. Houses in the US and what state, and here in the Hungary, blah blah blah. Yes, houses are expensive. Jefferson, please, when you buy a home without money, how much you look at? I'll address that. Commercial real estate can be even better. Yeah, commercial real estate is even better. You contact me on property in the US. Yeah, I can give you more information, but I'm not exchanging any money with anybody, except I know you very well. Yeah, Anne Marie said you see for sale by owner everywhere. Yeah, now you know what to do with it. It's a great investment, but there are very many wealthy person has many income streams in the real estate. It's only one of them. I need to watch this video over and over. Yeah, go watch this video over again. I gave you so much information on real estate. It is cash flow. So basically, I talked about passive income, moving from where you are to where you ought to be. I talked about so many things. Go back to the beginning of the video and watch. Thank you so much. Okay. All right, guys. Thank you. I think I've been able to give you all the information you need. And I will see you next week, 4 o'clock, for more investing tips. Thank you. Bye-bye.